Charleston Trident Association Realtors. I'm joined here today by Rob Woodul, the president of the association, and we're here to talk with a summer legislative recap video. Thanks, Rob, for joining us.
Well, Ryan, thank you for having me. We've got a lot to talk about, so let's go ahead and get started. Probably everyone has heard the acronym QRM, Qualified Residential Mortgages. It's a result of the Wall Street reform bill that is, affectionately named the Dodd-Frank Act. What does that mean to us as realtors? Well, it means that banks are having to hold 5% of their security-backed mortgages. They're having to put more skin in the game, and quite frankly, they make sure that they're giving out quality loans to qualified buyers.
Exactly, and so they'll have to hold on to the loans that are not qualified residential mortgages, 5% of them. Unfortunately, Congress did not define qualified residential mortgage, so it's left to the regulators to define it. And what they've proposed is a 20% down requirement. And what this would do is price younger buyers out of the market who will take longer to accumulate 20% down. And what we saw is 20% down is a standard that was never really existed on the large scale in the residential real estate market. From 97 to 2003, when qualified buyers were getting qualified loans that are still well performing, only 20% of the buyers had 20% down. So that's what we're going to see, and that's why we need to make sure solid underwriting standards are define a qualified residential mortgage and not a 20% down payment.
Right. It sounds like we're going to be pushing the younger consumer or buyer out of the market for a considerable amount of time. Well, ask yourself, what can you do? As realtors, we can get our clients involved. Have your clients go to homeownersactioncenter.com. Go there, let them put their words into action by contacting Congress, and urge Congress to reach out to these regulators so that the American dream does not stop. Reach out to oppose the mandatory 20% down payment of QRM proposal.
Rob, loan limits are set to expire on September 30th for the Federal Housing Administration, which is FHA, Fannie Mae, and Freddie Mac. And what they are going to do is that it will be lowered for what buyers can qualify for as far as the maximum value of loan. In Charleston market, the FHA loan limit will drop from $335,000 to $302,050. What will that mean for the Charleston market?
Well, it's basically taking the consumer, it's taking away purchasing power. They still qualify or could qualify for that loan, but because of the expiration of the limits, they're losing their purchasing power of buying a home.
And that's the important thing, to make sure that qualified buyers stay eligible for the loan products that are currently available. And you can take action on this by telling Congress to extend the loan limits by going to RealtorActionCenter.com and letting them know to stand up for consumers and their purchasing power.
Well, Ryan, our last issue we need to talk about is flood insurance. As you know, for the past couple of years, flood insurance, national flood insurance policy has expired or lapsed several times, which has caused delays in closing. Fortunately, the House has approved a bill, and it's going on to the Senate, but the Senate hasn't acted yet.
Right, and why flood is so important here is because when we had a lapse in March of 2010, we did an analysis of our multiple listing service and had 60% of the properties that were active were in FEMA flood areas that mandated flood insurance. What realtors can be doing is to urge their clients to have closings in October to go ahead and purchase flood insurance now before the September 30th deadline, because with Congress we can't assume that they will act by September 30th. We are doing everything we can to do that, but it may be early mid-October before they reauthorize the program, so they need to go ahead and lock in flood insurance before September 30th.
Yeah, and I think it's important to say that the bill that passed through the House is a 5-year plan, and that's something that allows consumers to have confidence. What has to be done now is the Senate has to act. They have to do something on this. They need to push this through. I know they've got a lot of on their plate with the debt ceiling crisis now, but this is something that is vital to our area. And flood insurance is not, and we saw this year, even in North Dakota, this is not just a coastal issue. This is something that affects every American at any time or can.
You're absolutely right, which is why the realtors need to go to RealtorActionCenter.com and urge their senators to go ahead and take action on flood insurance as soon as they're done with the debt ceiling issue, so that we can move forward and get some stability in the housing market.
Loan limits and flood insurance.
Yep.
Well, man.
Rob, thanks for coming today. I appreciate it. Hope you had as much fun as I did.
Yeah, man. Well, thank you for having me, and we'll see you in the fall.